All right, we're going to go ahead and get started. Good morning, everyone. Thank you for joining us today. We're going to be covering the SimpleTAX 1040 product today, but we're going to start with tax law update. There aren't a lot. It should be a relatively easy year on that front. So we'll go ahead and get started here. So we're going to cover the tax return due date, standard deduction increase, AMT exemption increase, clean vehicle credit, EIC changes, tax bracket increases, 1099-K form, and the recent changes with that, foreign income exclusion, and then a bit of information on student loan interest. So starting with the tax return due date, in what feels like forever, tax day is actually going to be on April 15th. It'll be April 15th, 2024. Bear in mind that April 15th is the last day technically to file your return in a timely manner, but it's also the last day to pay your taxes in a timely manner. Filing for an extension helps them avoid the late filing penalty. However, it only extends the filing deadline, not the deadline for paying any taxes that are owed. So you want to encourage your customers to pay when they file an extension so that they can reduce the penalties and interest for not paying. Okay. The standard deduction increases. We went up about $2,000 across the board. That's kind of about where it was, $1,000 for single. Last year it was $25,900 for married filing joint. In the coming year, it'll be $27,700. Married filing separate or single was $12,950. It'll be $13,850. And then the head of household was $19,400. It'll be $28,000. So we went up a little bit, pretty much standard adjustments for inflation on the standard deduction. The AMT exemption is increased. The AMT exemption threshold has been raised to $81,300. That's for your single filers, $126,500 for married filing joint. Additionally, the income range triggering the initiation of the AMT exemption phase out has been elevated to $578,150, 1.1 million roughly for married filing joint. The clean vehicle credit. This is probably going to be the most talked about item, I am guessing, this year. And the reason for it is this was part of the Inflation Reduction Act. So there's a couple of things that were a part of this Inflation Reduction Act that apply to electric vehicles or clean vehicles. For taxpayers who acquire an electric vehicle after January 1st of 2023, they can qualify for a credit that operates on a dollar-for-dollar basis. It is a non-refundable credit up to $7,500, so they can reduce their tax liability up to $7,500. However, if they purchase that vehicle after August 17th of 2022, which really after January 1st, the newly acquired electric vehicle must undergo final assembly in North America, and that's going to be a trigger for you guys to have to do a little bit of research depending on when they purchase their vehicle. You're going to have to find out whether or not it was assembled in North America. Don't assume that just because it's a foreign car, for example, that it was not assembled in North America. For example, I know Kia and Hyundai have a couple of big assembly plants in Alabama, in Mississippi. So just because it's a foreign car doesn't necessarily mean that it wasn't assembled in North America. And vice versa, just because it's a domestic car doesn't mean it was assembled in North America. There are a lot of GM has a few assembly plants just over the border here in Texas, so it may have been assembled in Mexico. Now, one other noteworthy change in regards to clean vehicles is for tax year 2023. Individuals purchasing a used electric vehicle may qualify for a tax credit capped at the lower of $4,000 or 30% of the sales price. So that is a very good thing, but it is also very new. It's the first time that they've ever allowed these sort of clean energy credits on uh, used electric vehicles. So that's something to keep in mind. So here's the EITC max AGI for tax year 2023. I think the important thing to remember is just sort of what the caps are for single and married, regardless of the number of dependents. If you know that the overall cap is 56,838, then if somebody making 60,000 isn't qualifying for EIC, you know why. As a single or head of household filer, right? Married filing joint, it's at 60, call it 63,000. It's 63,398. But if they're over that amount in AGI, they're not going to qualify for EIC. Okay. The EIC max credit for tax year 2023, it's $600 for no qualifying children, $3,995 for one qualifying child. Two qualifying children is 6604. Three or more is 7430. Now, keep in mind that if you use these numbers in any of your marketing, be sure that you use the words up to and don't just list these amounts because these are the max credits. Not everyone is going to qualify for the max credits. In fact, most people probably aren't going to qualify for the max credit. You want to keep yourself out of trouble with the IRS. So just remember to use the words up to when talking about these credits or putting these credits in any kind of media format, social media, or advertising. The tax brackets for tax year 2023. Uh, Again, these were adjusted for inflation. So you can see we're still operating on the 10 to 37% tax brackets, the 7 tax bracket system. Form 1099K. So this was a big topic last year. It's going to be less of a big topic this year. Next year it should be a bigger topic, but the IRS has once again postponed the implementation of the new thresholds. So the new threshold was supposed to be $600. Um, that was the threshold for third party applications, uh, Cash App, Venmo, Zelle, companies like that in particular, third party payment companies. We're supposed to start issuing 1099Ks for anyone who was over $600 in business transactions. They delayed it last year. They're delaying it again this year, but they're coming with, in the delay this year, they're going to be making preparations to increase that $600 threshold up to $5,000 for tax year 2024. So they're going to gradually implement the lower filing threshold until they get down to 600. But next year, it looks like the threshold is going to be 5,000, which means if they have more than $5,000 in transactions, they're going to get a 1099K from these companies. Okay, and that's treated as income, like any other income on a 1099K. The foreign income exclusion. In tax year 2023, individuals can take advantage of a foreign earned income exclusion up to 120,000. So basically, this allows qualifying taxpayers living and working abroad to exclude up to $120,000 of their foreign income from their taxable U.S. income. For those of us in Houston, we run into this probably a little more often than maybe some other places. We have quite a few defense contractors and oil and gas contractors here where these guys work overseas. But again, make sure that they qualify. You want to certainly don't want to have them exclude $120,000 if they don't meet the other qualifications. And lastly, we're going to talk a little bit about student loan interest. So when COVID hit, the U.S. government implemented a temporary payment pause for federal student loans. That pause concluded on September 1st of 2023. So as a result, borrowers can once again take advantage of the student loan interest deduction, allowing them to deduct up to $2,500 in interest for their student loan payments. That's really what it boils down to. Okay. So now we're going to kind of dive into the software a bit here. Move a couple things around here. So the software has been released. It is live. It is ready to go. Uh, bank applications have not been released yet. They're not expecting them to be released until January 2nd, unless you're with Republic. And then if you're with Republic and you qualified for the December dollars program, then it may be available for you now. But most everybody is with TPG. So for those of you that are with TPG, I believe it's going to be January 2nd that the bank applications will be available. Same thing with printing. Won't be able to print until January 2nd. We can't release those things until the tax year is actually officially ended. Okay. Um, for those of you that are new to the software, this is the work in progress summary. There's quite a bit of information that you can get from here. You can get your return count, checks if you're using TPG, if you're using TPG or Republic, rather. If you're using any other bank, you print the check through the bank's website. Get software updates, transmitting to the central site, and then your rejects and refusals will come here. And I'll show you guys using our demo software from last year what a reject looks like, so that we can sort of see how that works. We're just going to start a new return and we're going to go all the way through. We're going to start a new return. We're going to go start to finish. We're going to start by clicking add new. We're going to type in a social. The first field here is the date of birth. Then we start getting into the name information. And the client data sheet is like any other personal information sheet in every software. If you would like to send the customer text messages, you're going to want to check this box. Make sure that your client understands, how often you're going to send text messages and those things. Then you're going to choose the carrier. Then we're going to go down here to the filing status. If you have their ID information, you can enter that information here. It will carry over to the bank application. The filing status down here at the bottom, if you look, there's a gray bar here, and that gray bar will give you any of the information that you need for what the software is looking for in that field, right? So in this case, it's looking for a number for the filing status. We're going to choose 4 for head of household. And then we're going to move down over here to the address. The address we do carry a zip code database. And in that zip code database, you type in the zip code, it's going to give you the city and state for you. If your taxpayer is doing a direct deposit, you want to enter that information directly here, whether they're getting it from the bank or they're getting it from the IRS. Then you want to come down here to the marketplace. You will only check this button or put an X here if your taxpayer had health insurance through the marketplace. Okay? In our case, we're going to say we didn't. We're going to start entering in dependent information. Okay, and that's it, other than these boxes down here at the bottom. They want to enroll for audit protection, you would answer a yes here. If they are going to sign their documentation remotely, you do have to enter a yes here. It will not give you the option to send remote signature. And then this question is whether or not you want to include the remote signature charge on the invoice. So in this case, we're going to say yes on both. And now we have everything here. So our next step now is going to be adding income. So we're going to go add a W-2. Have an EIN database, so you can hit choices, or if you type in the EIN, it will fill the information out for you. So we'll enter in our wages and our federal tax withheld. On a W-2, you just want to enter the W-2 exactly as it appears. So if they have information down here in box 15 or box 14, you're going to put that information in. Same thing with box 12. Box 12 is where we'll see the majority of those things come in. In particular, this one, the cost of employer health sponsored health insurance. Okay, so now we can save, and you see now we're looking at a refund. We've got an AGI listed here. It's added the forms that it needed to add: the Schedule C, the EIC checklist, the child tax credit, and then the 8867. But we're not done with this particular taxpayer. They have a little side business. They work as an Uber driver for a few nights a week just to earn a little bit of extra money. So we need to go add a Schedule C for that business. They did get a 1099 NEC from Uber, but you always want to add the schedule first, and then add the forms. And I'll show you why. If we go to the Schedule C now and we add this, we're going to put this up here. We're going to choose a business code. My advice to you is use this business code or this business code as infrequently as possible. These are red flags to the IRS to start an investigation or an audit of the preparer themselves. This is indicating all of your returns are coming back with unable to classify. The IRS is going to look at this and think that you are too lazy to do the work. And if you're too lazy to put in the business code, it's likely that you're too lazy to do the 8867 or the due diligence. So that's one of those ways that you can kind of minimize that as much as you can. Let's see. Oh, I used to know what this was. Doesn't really matter at the minute. At the particular moment, we're just going to pick something. So I am going to use that code I told you not to use because I am too lazy to go look for one here. And you want to fill out the Schedule C like you normally would. It's not particularly complicated. Everything's kind of where it's supposed to be, right? We come down here to line 1. We're looking where it says income from forms 1099 MIS, 1099 NEC, 1099-C, 1099-K. What you want to do is come down here to the bottom and click form links. Then you can select the form that your taxpayer has. In this case, we have a 1099 NEC, so we're going to hit OK. We're going to come over here, and this is the payer's information. which you can use the same EIN database. Then we're going to enter the amount. And right underneath it is the box to link this. And this is where we're going to click link. We're going to click the choices button down here. And we're going to choose where we want this 1099 NEC income, this non-employee compensation, reported to. We want to report it to our Uber driver, Schedule C. So we're going to report it there by clicking OK. Now when we go look at our Schedule C, you'll see that information is now here. Then we have just the standard expenses, right? Advertising expenses, office expenses, those kinds of things. Now for our Uber driver, biggest bulk of his expense is going to be mileage. So we're going to talk about mileage and actual expenses down here in part 4. You're taking mileage. You're going to want to select this box, put the date that the vehicle was first placed in service. This is not going to be 1/1 of 2023. This is going to be whatever the date was that they first started using their vehicle for business. If it was in 2004, then you put 2004. So in this case, we're going to say he started doing this in 2020, February of 2020. And then we're going to enter the total number of miles driven for the business at 65 cents a mile. We don't have a split this year. So we're going to say that he drove, let's say 3,012 miles. And then in the commuting miles, you want to make sure that you're entering the commuting miles and the other uses, especially if you're answering these questions down here, any of these questions, yes. So commuting miles, he was commuting back and forth to work. We're going to look at that documentation. We're going to say it was 1523. And he didn't travel a lot in this vehicle. He has another vehicle. So we're going to say he did another 400 or so in other uses. Okay. Now you get down to 45, 46, 47A, and 47B, and we're going to answer these questions. Was your vehicle available during off-duty hours? Yes, it was. Do you have another vehicle for personal use? Yes, I do. Do you have evidence to support your deduction? Yes. And is the evidence written? Yes. Okay. So now if we go back up here to line 9, you'll see that it's giving me the 1973 because that's what it calculated based off the mileage. Okay. Now, if they're wanting to take actual expenses, we're going to uncheck this box. And we're going to come right here to the car and truck on line 9, and we're going to click form links. And I did this because I want to show you what it says here. This is a print only worksheet. You will not enter any information here. You need to enter it via the asset manager. Okay. So we're going to go back to that Schedule C. We're still on line 9. Here's the asset manager. If you go right here to depreciation on the left, or you can click add new and go to depreciation. And you're going to click new asset. And you're going to add that in. And the date placed in service. You're going to choose the type of vehicle that it is. Sorry, let me go back. I did this wrong. We need to use the car and truck, not the Schedule C. My apologies. We're going to use the car and truck. Then we do new asset. Date placed in service, 05/2020. Then you're going to choose what kind of vehicle it is. Electric vehicle, a light-duty truck, gas-powered automobile under 6,000 pounds. That's what we're going to choose. We're going to hit OK. Then you've got to put the original cost basis. And what the salvage value is. And then answer the questions. Was it available for personal use? Was the vehicle used by more than a 5% owner? Own the expenses. On these, I don't put force actual or force miles. The reason for that is if you enter everything in here, it may be better for them to take the standard mileage rate than the actual expenses. So if you're doing all of that, it makes it a whole lot easier. Now we go into mileage and expenses. So you're going to enter the total vehicle miles, right? And in this case, we're going to say it's 3. Let's say it's Let's just do 5,000. Total commuting miles we're going to say was 500, and average daily commuting miles this year was 5. So right here is where you're going to enter the business miles. So we need to put 4,500 in here because we put 5,000, but 500 of those were commuting miles. Then you're going to come down here and you put in all of the actual expenses: gas, oil, repairs, vehicle rentals, those kinds of things. We're going to say this was 2653. Parking fees and tolls, another 236. Going to kind of leave it that. And then we're going to answer these two questions at the bottom. Do you have evidence, and is the evidence written? Okay, now we're going to close this out. We're not going to take special depreciation on this vehicle because it's older than that. Hit return to list, and now you're going to see the car and truck expenses are listed here. 2948. That's the total of the actual expenses versus the miles. If we want to see, we can click form link, and that's where you can see where that expense is. Okay, so now we've got everything in, so we should be done, right? Well, let's find out. So we're going to hit verify and see what's missing. We're missing a lot of information, but let's go check it out. Right here, this is just making sure you have the signed 8879 before you transmit the return. The 8879, we need to choose a refund type. We're going to choose check from IRS because I can't show you the bank application in this training. I don't have the EFIN listed, so we're going to hit choices, get rid of that. Up ID, choices, okay. These two things should fill out automatically if your software has been set up correctly. Okay, so someone wants me to go over the car and truck expense again. So we'll go back and do this again. So let me go back here. Let's delete this. So if you're on the Schedule C, you're going to click depreciation, car and truck vehicle allocation, click new asset, type in a name or a description of the vehicle, enter the date placed in service, choose the type of vehicle it is. This is a gas-powered automobile under 6,000 pounds. You're going to enter the original cost or basis of the vehicle. We're going to say they paid $36,522 for it. We're going to say the Kelly Blue Book value on it is $23,666. Then we're going to answer all these questions. Okay, then we're going to go to the mileage and answer the total miles on the vehicle for that calendar year. So for 2023, what were the total miles? We're going to say it was 5,000. We're going to say 500 of those miles was commuting. We're going to say the average daily commute was about 5 miles or less. We could say 3, it doesn't really matter. Here, we're going to enter the business miles that we accumulated, right? Or the percentage of the business miles, the number of business miles from this total vehicle mileage, right? So we know it's 5,000 and the commuting miles was 500, which means this number should be 4,500. Then we're going to enter the gas, oil, and repair. We're going to say we had 2536. We're going to say we had another 300 in parking fees and tolls. I'm not going to worry about these other ones. And then we're just going to answer the questions. Do you have evidence to support your deduction? If yes, is the evidence written? Yes. So we check those boxes. Now we're going to hit close. We're going to skip this by hitting OK. Then we're going to click return to list. Then we're going to hit close. And now you see that 2948 is there. Give me one moment. Sorry about that. I'm fighting a cold here. So we've gone over that again. So let's hit verify. We're going to go through these verification errors. So right here, we need to check the yes or no on this box. And this is where you're asking about digital assets, such as cryptocurrency. We're going to say no for this training. Not going to worry about that. We're missing a field. Oh. We're going to get this message because the signature date is defaulted to January 2nd of 2024 because that's the first day you can actually sign. EIC checklist. So now you need to So now we're going to answer question 10. Is a child unmarried? Yes. Could any other person check yes on lines 9, 10, 11? For 12, we're going to say no. Okay, so now we're going to go back and verify. Looks like everything else we have left is for the 8867. So now we're just going to go through and answer these questions. And one of the quickest ways you can actually get through your verification errors, I'm going to show you. So we're going to hit verify. We're going to select this first one. And we're going to hit enter. It's going to take us to the line. We're going to put our X. We're going to hit enter again. Now it'll take us to the next one. Now, make sure that you are reading these questions because ultimately you're going to be responsible for the answers on here. I cannot stress the importance of due diligence enough. That's why we give you these things down here at the bottom where you can actually mark the records that you use to verify or documents that you use rather to verify. You also need to keep a copy of any of the documents you relied on. So if you relied on school records or medical records, you need to keep a copy of those. Let's hit verify. A couple more. Business license, we've got Form 1099K. And the very last one down here at a household. So now we're done. That last verification error is not going to go away. Not until January 2nd, and then it will go away. So now we're complete on everything here, but we need the taxpayer to sign. That's usually my next step. So that's where we're going to click print. And then you can either hit sign doc if you're using a signature pad or the mouse. Or if you go back here, you're going to hit remote sign. It's not letting me do remote signature because I don't have a credit card on file. There is a $5 fee per signature with remote signature, and you will need to set up the wallet. There's also a $4 charge per return when you e-file if it's not a bank product. The $4 is included on all the bank products, but on all the non-bank products, it will charge the wallet, okay? So you click My Wallet. See if it'll load for me. And then you're going to click however you want to do this. You want to add a new card, or if you want to do ACH, whatever the case is. The very first thing you have to do is put your email address in here. And then you can do add new card. You'll enter your credit card information here. And then you'll click reload balance. You also can click reload settings, and this will tell you. You can have it set to manual. You can have it auto reload an amount. So sort of like if anybody has an Easy Pass, For the toll roads, once it gets down to $10, they charge your card again so that you stay at $40, for example. Or you can have it set to pay as you go. Pay as you go means it's going to charge you. So if you have $4, it's going to charge you $4. If you send 2 remote signatures in a return, it's going to charge you $10 immediately, not pull it out of a wallet. All of those are your options. Okay. So once we've done that, our next step is then to print the return for the taxpayer, right? We've got a couple of options here. You can email it. I mean, you can print regular print. You just click print and it will let you print. Right now, everything's probably watermarked. Let's see. I'm using Adobe just to show you guys how the print works. So that would be a full return then, and you see everything is here. Okay. The other, we'll close this here. Go back to the software. The other option that you do have is you can email them a copy. Email it. It is encrypted, and this is the password. But when you hit OK, you're going to get an option here to send the password via email or text to the taxpayer. And then you just hit OK, and it sends them that email. It'll send them this email just as it appears here with an attachment PDF of their return that has the password on it. If you are emailing it, it is required by the IRS that PDF is encrypted. That's the law. Okay. And then your last step is in transmitting. So you'd hit Q, select it, you'd hit Q again. It tells you what that fee is because there's not a bank product here. And then it would close the return, take you back here, you hit transmit, and then you hit transmit again, and the return has been sent off. Very quick, very easy. The software itself is very easy to use. It's just a matter of getting in and doing some returns. Okay. A couple of things I can't show you in here, but I am going to show you in our demo from last year. One is the rejections. I'm going to show you guys how our rejection system works in our desktop software. Okay, so if you have federal rejects or state rejects will show up here as well. But if we hit Fed rejects, it's going to show us here some IRS rejections we have. We're going to open it up, and it's going to give us the rejection. This message box is not enough for you to see the whole rejection, right? It just kind of gives you an idea. If you select it by clicking on it and then click details, it will give you the full information. So in this particular case, they're saying that this dependent with social 411013014 has already been used as a dependent on another return. If we double click, it'll take us to the field that's causing the rejection. And it will show us the rejection down here in red at the bottom. So our only option here would be to remove this dependent or paper file this return and fight with the IRS about who should be claiming this dependent, right? One of the other things I wanted to show you guys in here, in particular, is the checks registered and activation. You want to make sure that you have check numbers here in your starting check numbers for those of you that are using TPG or Republic. To do that, you just click activate, you select your bank, enter the starting check number, the ending check number. Most of you do not have site IDs. If you do, you'll know. And then the check layout version. The check layout version for TPG is printed on the check on the right hand side, just above the check number. Okay. And then you would just print your check. I encourage everyone to go in and at least print a test check before the year starts, so that you make sure that everything is lined up the way that you want it. You make sure that it actually is printing the test checks before you get in there and you're trying to scramble and get stressed out with checks that need to be printed, right? So does anybody have any questions over anything that we went over today? You can unmute yourself if you'd like, or you can type it into the chat. Either one is perfectly okay with me. Okay. All right. So this webinar was recorded. It will be uploaded to our YouTube channel this afternoon. So if you want to go back and watch it again, you can. The prior years rather, of our webinars are posted there as well on our YouTube channel. And you can get to our YouTube channel by going to simpletaxsupport.com and then clicking clicking the YouTube icon down at the bottom. Someone asked, is it possible to submit the report, the BOI in the system? No, my understanding is the BOI is being submitted directly on that website. I'm not aware of the BOI being part of the software at all. If it is, they haven't told us this. So let me jump back in here real quick, because I know there was a section at the bottom of the 1040 that talked about that. Schedule 1. It's the bottom of Schedule 1. Yeah, you have to go to FinCEN directly to file those. And in fact, here's a PDF. We include a PDF to determine whether or not, or to help you determine whether or not your taxpayer even needs to file that particular thing. So there's all this. But my understanding is that's not even going to be available until January 1st. And I don't think that they even have anything up. Yeah, you have to come here to file this. And it's right here on the site. How do I file? Go straight to their website to file it. I'm not aware of it being included in any software, and there's no fee to submit it. My understanding is it's really not that complicated. Business will be released if it isn't already. It'll be released as soon as we. Yeah, I don't even think I have a business license on here, as a matter of fact. But it'll be released as soon as we get approval for the forms. The IRS always takes longer on the business returns than they do on the 1040. Part of that is because business returns just stopped being able to be e-filed yesterday. So, to answer that question for Luis, is as soon as you're already, if you bought the business package, you're already queued for it. Just transmit and apply updates. You'll see the business update in the update section. It wasn't there this morning. I know that because I just transmitted a few minutes ago to see if there were any software updates, and I didn't have one. All right. Does anybody have any other questions? Okay, so GJ was talking about having a lot of issues with the 1095A. Issues with you getting rejections for customers not reporting their 1095A? Is that what you're talking about? Okay, so let me give you a little bit of insight on this. A lot of people think that if they don't go to healthcare.gov and buy their health insurance, that they're buying private insurance. That's not the case. You can go to unitedhealthcare.gov, for example, or Blue Cross Blue Shield, and it will put you through the marketplace. It's not, it's an indication. Look, if we go shop for a plan here, part of this process, and it's right here. Enrollment for ACA plans is now open. A lot of these websites, United Healthcare, Blue Cross Blue Shield, for example, the two biggest ones here in Texas, anyway. Um, they're they're going through ACA plans first. They're going through the marketplace first. And if you qualify for a premium tax credit, then you're getting it. And a lot of people think that, well, no, I got it through this, or I didn't go through healthcare.gov, so I don't have a 1095A. That's not the truth. That's not the truth. They can get ACA healthcare plans other places than going to healthcare.gov. And I think that was a big part of why we saw so many rejections last year on the 1095A is people didn't realize that they were buying ACA plans. Um, that's the biggest part of it. I do know that there were a few I saw last year where people just didn't have ACA. They called healthcare.gov and they still didn't have them, but the IRS still had them marked for it. I assume that the IRS has cleared that up, but that's a pretty bold assumption for me to make. The IRS doesn't have a history of cleaning things up quickly. So, fortunately, we're at their mercy on this one. DJ, if you run into that with someone who um, they've called the healthcare.gov and they don't have one, reach out. I've got some reach out to support. There's some additional instructions that we could maybe do uh, that would help you in those particular scenarios where you're sure, but you want to be absolutely sure, because if you submit an explanation as to why they don't have health insurance and they did have health insurance through the marketplace, it's just going to delay their refund even longer because the IRS is going to send a letter telling them, no, you did. We need the 1095A. So that applies to everybody, not just GJ. If you run into that situation, be absolutely sure. And if you're absolutely sure, then call us and we can give you some further instructions on how you can submit a document or an explanation, which is the second part of that rejection. We can show you how to submit an ACA explanation with the return. Okay. DJ, those are great questions. I appreciate it. All right. If nobody has anything else, so we're going to go ahead and close this out and wish you guys, the rest of the day be a good one for you, and the upcoming holiday. Get ready to roll. We're 5 days away from the start of the season, so whatever we can do to help support is here. You guys have a great day.